How's it going, folks? All right, so I've been hearing a lot about TSPY. A lot of folks in the comments are talking about TSPY. So what I wanted to do is do a comparison video comparing TSPY to SPYI. I think they both have merits. I think one is a little bit better for yield, one is a little bit better for growth, but both are semi the same and to some degree in terms of performance. So let's jump right into it and do the comparison. All right, folks, first and foremost, I wanted to call out my Patreon as per usual. We currently have 42 members, and I really do want to keep increasing this, keep growing this. You can see here, guys, we have two membership options if you want to join. We have a $5 tier where you get access to all the calculators. You get access to the community chat room. You're going to get access to my email newsletter, which I'm going to come out with, my top tier ETFs list, all for $5 a month. That's less than the cost of a coffee these days. Or the elite tier, which is $15, where we'll add on a quick discussion if you want to meet once a month for a quick, financial discussion plus all the other benefits. That's there, and that's basically the cost of a coffee these days. Inflation, a latte that costs $15. So I would love to keep growing this, guys. It means the world for those that have participated and have engaged. Truly, it warms my heart that I can help you and help your financial journey a little bit to some degree. And I want to continue to do that with more people. So please join if you can. All right, so let's just jump right into this analysis, this comparison today. And what we're going to do is compare SPYI, which is the NEOS High Income S&P 500 Fund, to Top Alpha SPY Growth and Daily Income ETF, okay? Top Alpha is newer to the market as they've they launched in August of 2024, and SPYI launched in August of 2022, okay? But both are fairly newer funds that both, of course, seek to write covered calls on the underlying asset of the S&P 500 to generate monthly income for its investors, okay? I wanted to share one quick note or one quick example of what Top Alpha, what TSPY expects to do in certain market types, okay? So in bear markets, it's designed to outperform. In flat markets, it's designed to outperform because you're getting the income in the flat market and in the bear market. In moderate bull runs, it's supposed to outperform, but in full bull rallies, it should underperform because it's writing those covered calls, and you're not going to see the total upside on the upside of the equities as a result of writing the covered calls and stripping out some of that potential upside for the benefit of income. Okay, and so that's kind of it in a snapshot. And is that going to hold true? We shall see. But generally speaking, definitely during bull rallies, your underlying assets would perform better. And I just want to stress that, a lot of people in the comments say, "Oh, well, you should just buy the underlying asset; it performs better." Then do so, guys. If you are looking for growth, and you're looking for, if you're looking for the highest return and highest growth, it's always going to be the underlying asset, 9 times out of 10. Right? But this is for people that are looking for a hybrid approach of a bit of growth plus income, where they can maybe live on some of this stuff in the interim or drip it for a snowball effect, right? People that are purchasing this are doing so because they have income focus in mind, right? And they're willing to sacrifice a bit of that potential growth for the benefit of less volatility and some income, all right? So just keep in mind that these funds, people have a different mentality with these funds. They understand that, the underlying asset, whether it's S&P 500, QQQ, or another subset of stocks, they're probably going to outperform these covered call solutions, these covered call assets, but they're okay with that for the potential of this consistent, stable income and less volatility. Okay. So the main difference that I've seen with Top Alpha versus SPYI is the way they handle their covered calls. TSPY writes the covered call pretty much on a daily average, pretty much every day. They're writing new calls. So they're seeking income every single day, and with that, they're going to capitalize on less of the upside that the S&P 500 has to offer, but potentially generate more income on a consistent basis. Whereas NEOS SPYI is writing calls, out of the money calls on a monthly basis, and with that, they can seize a little more of that price action, seize a little more of the price return. And in terms of their taxation structure, they're both fairly similar, okay? They both pretty much have 100% return of capital against their assets, against their income. So note that the taxation-wise, they're pretty much the same. Expense ratio, SPYI takes a little bit of the cake because they have 0.68 versus 0.77. And NEOS has been around for a little longer and have capitalized on stronger assets under management with 5 billion versus 75 million. So if you want more volume and you want the name with much more assets under management, it's definitely SPYI. All right. So now let's jump right into price return. Okay, let's look at price return. As we always do, we'll start with price return over the past year to see which one generates the stronger price return. And you can see that SPYI over the past year has done 4%, whereas TSPY has done 2%, right? So as I mentioned, SPYI is going to be the better price return NAV grower. And for me, I do like a NAV grower. I prefer a little more of a NAV grower versus just a flat NAV, because there's potential for increased dividend payout as a result. So both have grown, but TSPY has grown a little less, about 50% less really, versus SPYI. So certainly if you want the NAV grower, it's going to be SPYI, okay? But then let's look at your yields. Let's look at your yields. Let's come down here. Where are we? Let's come down here. So SPYI, trailing 12 months yield has been about 12%, whereas TSPY has been 14%. So you're getting because you saw the price return was stronger for SPYI. You're getting that price return action by way of the yield, essentially. So if you're seeking more yield, and I know a lot of people are with these funds, it's going to be TSPY. If you're seeking a little more of a balance of NAV growth plus a great yield, it's going to be SPYI. Okay. Now let's look at total return. Okay, so looking at total return over the past year, you're going to see that they're pretty much in line with each other. So TSPY 17%, SPYI 17.48%. So SPYI does win overall in terms of total return. If I were to, I can't expand this out much further because of the length of time that TSPY has been out for, but pretty much over the past year, SPYI is the stronger returner versus TSPY. So yeah, I mean, ultimately, if you want the better return and you want a little bit of NAV growth, plus you're okay with a little less yield, it's going to be SPYI. If you're just yield chasing and you want the stronger yields and you like the daily option calls and you like the way they're structured, then TSPY is going to be the way to go, okay? Looking at Testfolio from inception, all right, SPYI versus TSPY, if we were to invest 100K into either or, all right, with SPYI, we would have had 116K over a year period from the initial balance of 100K, 160K 500, and from TSPY, it's 116K 300. Really, guys, so quite similar CAGRs, cumulative return, quite similar, but for me, in this case, like going back here, I like the fact that we have a lower expense ratio. I like the fact that there's stronger assets under management and they've been out for longer and they're the bigger brand. So for me, I lean towards SPYI. I know a lot of people are liking TSPY and liking what they're doing for the yield. But for me, what really attracts me to SPYI is going to be more of the NAV growth alongside the yield. And that's why I even like a GPIX or a GPIC, maybe even more than NEOS, just because I do want to see NAV growth consistently. And I want that NAV growth over time in tandem with the dividend yield. So what do you guys think? Which one do you prefer? I'm leaning towards SPYI, but I think both have merit. You won't be unhappy with either or. But let me know in the comments below. Please sub to the channel. Please comment. You guys have been amazing at commenting and offering feedback, whether it's positive, negative, or constructive. Please continue that. I love it. Outside of that, guys, all the best and cheers.